3:30 p.m. Eastern Time, final hour session. Let's discuss a little closing bell action. Holiday all-time highs. Can the U.S. markets hit new highs before 2026? We are close. We're giving it the old college try, as they say. 69.03 highs today. We took out yesterday's poke with the Fed. We had a nasty little gap down today, about 0.3, 0.4%. Came down to fresh lows, rallied back up. I said that price should be closing. If we're going to see the market makers do their job today, we had an open around 68.61. That open is 68.61. We had a plus minus 36 on the day. So let's go 6861 plus 36.43. So 68.97 or lower should be our close. 68.97 or lower should be our close if the market makers are going to officially keep it within the expected move on the day. All right. So we will see. I do have some profit traps sprinkled in for the day. Let's see if we can possibly hold the 6,900 handle. Maybe it gets sticky there. I do have some trades running in the final minutes. I'll show you that right here. If we come back into like 90 or 85, that would actually be freaking sweet, because I did place a profit trap in here on my, so I guess 90 is okay, but 85 would be better. 85 to 80 would be awesome. I have a profit trap on my double ups right around that strike. So I do have a profit trap at 6,900. We have daily profit play line in the sand at 69.10. And hopefully between the remaining contract I have in daily profit play and maybe a trap around 6,900 or that trap around 60, 68, 75 or 80, that would be ideally where I can see price finish for the day. So in about 26 minutes, things will get a little bit more exciting. And here is my remaining contract for daily profit play. Currently up about $90 out of the max 100. I'm looking to hold that into the close, so hopefully price will respect this 69.10. Iron Fly, these are in some trouble. This one's only risking $25, no big deal there. This one was risking a bit more. The double up trades, I'm risking $2.65 and $1.60. This one is the one that has a chance. This one has a chance to maybe grab some profit at the end of the day if we drop back below like 68.85 or 68.80. This one is a 6,900 that maxes out at $460. If around 6,900, this could be interesting. And then I've got another fly that's up a little bit higher. So net on the day, I might if I land a profit trap today, anything between $400, $1,200, $1,300. Some of these are not looking good, so really it's just a tiny risk on some of them. And then yeah, I mean, I as long as I can grab, maybe $50 to $100 net profit on the day, that'd be pretty happy. A profit trap would be even better because I could stand to gain anywhere between, $400 to $500 net, which isn't too bad. So, all right, we'll keep an eye on this one for the next 25 minutes. My other screen will show my level. So I'm watching this. I'm cheering on a pin price around 68.85 or a pin price around 6,900, ideally. I do have a profit trap, I think, in the 69.15s. Let me double check that. 69.15. So somehow, if I get really lucky inside the 69.06, 69.07, there's a few $100 profit trap there in addition to my daily profit play. I just don't really want to take on that extra risk. I'd like it to just stay at 6,900 or go down. That's the easier trade. So we'll see what we get. All right. So when the dust settles, let's keep an eye on it. I'd love this thing to come back down to fill this previous starting point, which is the gap from yesterday's close. So if we come down here to 86, that'd be great. If we come down to the positive negative gamma pivot around 80 to 75, that would be awesome as well. There's like a $700, $800 profit trap down there. That'd be a winner for double ups. So, all right, we'll keep an eye on it. Silver, fresh all-time highs today. S&P is flat. NASDAQ is down 0.5%. Interesting. Well, it shows down 0.5%, but Qs are up on the day. They're just, they gapped lower. That was a pretty aggressive gap on Qs. So we closed higher yesterday, gapped lower, went lower, fought back kind of tooth and nail. This does look like a bit of a dip, though. I can see the NASDAQ with, this little pullback to the 21-period moving average, offering some buying opportunities to then work its way into all-time highs. It might take a little bit, may not be done. Maybe the market wants to come back and retest this NVIDIA candle level. This is QQQ, maybe retesting like a 615 or 614. Otherwise, I think as we get into the holidays, this might just continue to push the markets up a little bit higher. Diamonds up to fresh all-time highs in the Dow today. Hooray. Russell hitting all-time highs again today. Hooray. This is where the argument is that there is a rotation, right? It's not Mag 7, it's not tech. We're seeing some other sectors speak up. Here is the sector performance for the day. Materials leading the charge. Industrials leading the charge. Okay. Tech. Services. I mean, still green on the day. Utilities down. But materials, I mean, aluminum. Does anybody have any Alcoa in their portfolio? This thing's been ripping for the last couple of months. I've been holding this thing since COVID. I bought Alcoa at like $20 and it's trading at like 47 right now. Not too shabby. Industrials, kind of the boring stuff. The question here is, are these good sectors to be leading the way in a bull market? Part of me thinks no. I'm not saying that a bull market is in jeopardy, but I think this could be like the late innings of the bull market when we start to rotate out of tech and into what got us into the bull market. It kind of becomes like a little bit more defensive, a little bit more blue chip dividend based. Maybe growth slows, and it's just like a pretty healthy rotation. We will see. Year to date, tech is still led, communication services still led, obviously heavily weighted by major tech, Google and Nvidia, big contributors to why those are doing so well. But not too far behind is industrials and utilities. 18.4% industrials, 12.91 utilities. These should not be like crazy bullish sectors, but this year they are. All this AI narrative, all this AI build out, the data centers, kind of the new data centers and AI stuff is the new real estate. It's new land, it's new utilities, it's new rent, it's new ownership. And it is a mad scramble to, build this out and who owns what and who's going to be benefiting from, data centers, the grid, and everything that goes with it. Hopefully growth, hopefully productivity, yes. But overall, real estate, consumer staples down on the year. S&P is up 17+% year to date. So do you have some sectors outperforming it? Yes, you do. Healthcare, big comeback into one of the worst performing sectors this year to now 10.5% positive. So not too shabby year to date. But industrials, utilities, I do like these. I'm trading. So XLU, I've got some trades in. XOP and XLE, I have some trades in. Just trying to get some exposure that's non-correlated. Then we'll see where the market goes. Right. Okay. So all-time highs in the Dow, all-time highs in the Russell, RSP, which is equal weighted, all-time highs again. I mean, this is a pretty good move. Equal weight, having two strong days with yesterday's push on the Fed and today's follow-through, a lot different than the markets in the S&P. SPY not making highs, RSP making new highs. So encouraging. Let's go to the heat map for today. 59.1% of stocks advancing, 38.4 declining. Some Mag 7 in the red. Amazon down, Tesla down, Google down, Meta down, Apple down, Oracle way down today, Nvidia down today, Intel down today. Okay, let's take a look. Oracle, saw that pop up on the highlights. Big gap down. Why? Earnings? Missed in revenue? Yeah. I mean, I didn't like, outside of people getting paid handsomely with this ridiculous 40% gap to the upside, it probably beat the expected move. As far as like, if you're trading it both directions, I typically trade earnings like omnidirectional. So when the market can go both ways, this was a 220. I mean, it moved about 20 points. It was down as many as 30 points when the market opened today. So if you were quick to the trigger to take a trade off, I'm not sure what the expected move was, but I can tell you that it wasn't 40% from this previous one. In fact, I'll look it up. What do you think options should have moved? Options slamma jamma. Let's go to Oracle. Average earnings. I got to log in here. Okay. So average move on earnings with Oracle is 18.89%. So 18.89 times we were trading around 220. Wow. So the market expected about a $41 move, and we had a $30 move. So it stayed within the market maker levels, which means if you were, buying a straddle, you're losing instantly, which is never fun. So sometimes it's expensive. This time of year, it's like it's a wild card. It's a coin flip whether or not you can pull out an earnings trade like that. So anyway, there's Oracle down for the day, Tesla down slightly, Mags down a little bit off the highs. Let's go Mag 7 here. So Apple just off the highs, Amazon, pretty decent correction here in Amazon. I like me some Amazon 1677. I'm trying to think, how far did I go out on one of my recent trades on Amazon? If I go out to the weekly, can I go back down here to 80? I mean, that'd be a crazy trade. This might be one for Project Options Edge. Let me take a look here. Amazon. If I go out to January 2028, a 120 by 110. I mean, I don't mind this trade. If I could own shares of Amazon, there's a $1,500 profit trap. I'd own the shares at 110. 110 minus 15 minus $1.95. I'd own shares of Amazon at $93. It'd be just above the Liberation Day levels. That to me is a pretty good income trade. We'd have about a 60% discount on Amazon. If I wanted more income, then I tighten this up. Okay. This one gives me a $5 profit trap plus the credit. I get more of an income trade here. There's a nice percentage of profit, but I'm going to go after a little bit fatter profit trap. I wish I could go more strikes here. Give me 1 second. So January 2028, June of 2028. I know that's way out in the distance. Could I go like 150 by 115? $0.48. This gives me a $30 profit trap. Let's check the break even. So that'd be 125 minus 25 minus $1.88. Break even at 98.12. Or I go to January and do the 120 by 110. $120 by 110. That is not bad. So 110 minus 10 minus 270, break even 97.3. I like that trade. So $270 income. If I wanted to go $1,500 to lower my cost basis, it would be 110 minus 15 minus $1.95, 93. The smart thing for me is take the trade, take the lowest possible break even price if I want to own the shares, which I would, and throw in some Amazon. So I think I'm going to take this trade. Let's see if I can get filled for $2. $2 on margin accounts. I don't mind having this out there for some buying power. Will it fill at 2? Pending order. Okay, let's try to go $1.95. Hopefully will fill. $1.98, $1.99, $1.98, $1.97, $1.96, $1.95. Filled at $1.95. All right, new trade coming for Project Options Edge. Coming in hot. New trade. Amazon. Amazon shares. If price is less than 110 by expiration. Break even. That trade has a 95% chance of profit. 95% probability of profit. Assignment risk is about 6%. And the put's filled for 380. So break even would be 110 minus 15 minus $1.95, 93.05. Otherwise, if price is greater than 125 or 110, I keep the full credit. All right. What else? If you don't want the shares, the sell put at 110 filled for 380 credit. So consider let's go 760. So 3.80. So 760 or 1140. So you can manage the put side and just manage the credit. I got filled for 380. If you want to manage it for a stop loss, manage it to about 1140, and that would be about a $700 to $800 loss. It's a lot better than take on the assignment. You just don't have a backup plan if you're managing the credit side. Just take the loss. But I'm going to take the shares. If I get assigned, then I'll repair it. Okay, that trade is in. Adding this. Oops. Okay. Market trend at 68.93. Come on, profit traps. Where are we at? Defense fly, iron fly, tight iron fly. If we get to 6,900, that one has a chance. This one is just down a little bit. Come on, either get to 6,900. Like, don't stay here. Either get to 69 or get to 85. Like, let's get, maybe a 7 to 10 point move one way or the other. There you go. That's making it look a little bit more special. Now this fly here, over $100. Look to close this one down around. See if I can get this thing but for like $1. That'd be a $300 winner. Okay, keep an eye on that one. Back up to 69, final 10 minutes. Oh, baby. Things getting a little more exciting. 6,900 profit trap is there. Question is, are we blowing through it or are we staying there? So that would be hopefully a bonus profit here. I'm up about $200. Come on. This one pays pretty darn well. If we get like to 69.10, it could be a $500 bonus trap here. So between this one, and an extra contract here, there's about $1,000 up in the air for profit. So I want to see where cash settles here in about 9 minutes. All right, I'm going to get my Amazon trade in. So Amazon. Buy the 125 put, sell the 110 put, $1.95 credit. All right, so that trade is in. All right, anything else you want to take a look at? We got a few more minutes. I'm gonna keep a close eye on my Current trades and current profit trap, 6902. Come on, man. Maybe I get really lucky at like the 6789. I get a profit trap in that plus the daily profit play. If we get over 10, it's going to wash a little bit, but we'll see. Okay. New trade. Okay, hang out around 6,900. That'd be pretty perfect. Working order. Let's go. Netflix. Netflix. I have a ratio spread running. Once we're still down. I did a ratio spread that's down to like the $70 area. So it was a little income trade. You know, look, longer term, I like Netflix a lot. It's just stay out of the way. So right now I have a 78 by 70. If I were to take on any shares, it would be $70 minus 8 minus $1.20. I'd own the shares at $60.80. I don't think we're going to fall that much. I think there's plenty of support in here. So, I mean, this is a 100 period moving average right now. So if we bounce there, it wouldn't be a huge surprise. So, you know, it's on 31%. Where is fair market value on this? Fair market value on Netflix. It is 40 times earnings, $80 fair value. So, I mean, yeah, we could find it. I mean, here's a 100 period, here's a 200 period. I'd say between like the $90 and $80 zone or $90 and $75 zone, it looks pretty attractive for a bigger picture hold. You know, look left on the chart. Here's $70. Previous all-time highs. That's right around like the 50 to 60% fib zone as well from this like low to high swing. It just wouldn't surprise me to have a lot of these stocks going into 2026. Take your April low, take your October, November, December all-time high, and just measure it. Look for some fib levels and just watch price. If price is in a fib zone, just keep an eye on it. Right. So, I mean, I like it. I'm positioning for, you know, I would own it. It'd be down here below the 61% fib. And that would be a pretty good discount. I mean, we'd be down to $60. I'd have about a 55% discount on Netflix. Fair value is, you know, mid 80s after the split. So if I own it at 60, take it up to 75 or $80, that's a pretty good return. I'm not looking to hold it long term. I'm just looking to, you know, flip it essentially. Fine by me. Okay. Quick spot check. We have 5 minutes to go. Looking good for full daily profit play below 69.10. Iron flies, watching closely. I'm up $150 on this one. That gives me up $250. If I can get this one up a little bit higher. Can we stick at 99 or stick at the zero? 6,900 would be a nice close today. That'd be an awesome close today. Come on, bulls, be generous, would you? I missed I'm like the other day when I was doing the final hour session, I had it like 40 and I need a price to be at like 41 or higher, 39 or lower. And it was at 40 and change. It's like right in between my butterfly spreads. All right, we're at 95. Come on. 6,900, the final 4 minutes would be sweet. Come on, bulls. I don't think 90 gets me anything. This profit trap for 90 doesn't help because my break even's around 87 and change. So we either need like a fast, like 10-point drop, or we need like a 5 or 6 point rally into the close. That would be pretty ideal. So watching this one for some profit. I've got $100 on my daily profit play plus the 70 I pulled out earlier. 4 minutes. All right. Come on. Stickiest gamma is at 69. Come on, man. Come on, get there for the close. Okay, 130, 126. I don't understand how this is showing a debit right now. It's just like that crazy price action at the end of the day. There we go. Come on, man. Get me right to that 6,900. There we go. So 460, trading at 260, up $200, puts me up $300. Two. There we go. 250, 235. Come on, baby. 2 more minutes. It could cash settle right around. I mean, if it hits the zeros to close out the day, this could be pretty perfect. Let me try to lock in at least $260 in this thing if I can. There we go. $2. Can I lock in $2? Survey says, come on, man. We're right at 6,900. It's really close. All right, I'm going to let this thing ride. This might be stupid. The closer we are to 6,900, the better. 278. There we go. Come on, $2. $1.80. $1.90. All right, just close out for $1.90. So that is 460 minus 190, 270 plus 170, up 440 on the day. And I took some heat. I took some losses on my other flies. This one's down 55. That's max loss of 20. So 440. And the net was, let's see, $1.60. So minus $1.60. Oops. Minus 265. I just broke even on the day. Pretty much. That's all right. At least it was exciting at least. All right. So net on the day about $20. But more importantly, and that was just me just throwing some trades out there. I wanted a bigger profit trap. Anyway, daily profit play, nice winner on the day. Grabbed 70 cents earlier on a contract, grabbed another full dollar. We had the 69.10 strike. Double up, 2 small losses. That's fine. I put the profit trap in at 6,900. That one worked out. I mean, part of me wishes I went 10 wide. It was just more expensive when I put on the trade. So I mean, it cost me 40 cents. 40 cents debit for a 200 and some dollar. What I do? 460. What was that? Iron Fly. Yeah. So this was risking $40. So 460 minus $1.90. I made 270. Now it would have cash settled. So $5, and we're $2.10 away from that. It would have made $290. So if I let it cash settle, I'd grab another $20. But it's very slippery in those final few points. But overall, like still happy on the day. So making some profit. My overall P&L on the day flat essentially, which I'm fine with. I still have plenty of extrinsic value. I'm getting lots of time to can a lot of my trades. The nice thing is I'm excited for, let's say, January, February, where a decent chunk of this extrinsic is going to come into profit. So 552 up to $780,000 or so. If I'm just going to roll this into like Q1 next year. So anyway, I trimmed a lot of risk this week. Everyone that's in my waterfall income knows that we only have like 3 or 4 or 5 positions open. We had another winner close today for XSP. So I think I have 5 open positions in SPX. XSP closed all of our trades earlier. We closed out 3 winners on SPX. that were above the 6,000 handle for SPX. So we added, I want to say trades 111, 12, 13, and 14. So Waterfall Income has 114 winners, averaging over 90%. It's like a 94% win rate in that service. We had a nice full winner today on Daily Profit Play. Very good there. Okay. Good stuff. How we do today? So 69.10. Did the market makers do their job? No, they didn't. We had a plus minus 36 on the day. These are the levels that we needed. Even though price was threatening the upside, we still got paid, which I'm totally happy with. It was a slow grind all day. This does make the markets very difficult when you have the prices closing near the highs of the day. Very little defense there. Okay. That's why I had some flies all over the place. I didn't think that we necessarily close at those highs. Tomorrow's Friday. We'll see how the week ends up. But for the week, it's still a positive week. Doesn't look like much. It could all be taken back in a blink of an eye, I'm sure, but market opens up around, here, and it's up on the week about 0.4%, 0.5%. We're within 20 points of all-time highs. So could Friday be just another melt-up day? Very possible if the market wants to go after all-time highs. If we don't, it's like, would we stall? Like, why 6,900? Right? Why would this? I don't know. I mean, would it stall? Maybe. But I would say structurally, as long as price stays above this level, this is path of least resistance, get to the highs, holiday rally. I mean, we do have some data next week that could be concerning, a little bit of volatility kind of baked in. But if the market's going to get to all-time highs and we're left with Christmas and New Year's without a lot of volume, I think this melt up in the end of the year could be pretty decent. For the month of December so far, last year was a negative December. And this year we are sitting with a small little sliver of green. So November, I mean, it's really just the story of like April and November, right? Big volatility spike here, big volatility spike here. December, if we, have a green month, that'd be solid. If we have a January solid green month, great. But am I cautious? Sure, I'm cautious because I think we could have another pullback, right? If we get to highs, that's fine. But de-risking, raising some capital. Nice win, Greg. Good, man. Okay. What else can I help you with? What are we looking at? Overall, tail of the tape, currencies on the day. It was a dollar weakness day like yesterday. So dollar weakness after FOMC. Today is all about Swiss. Japanese yen was strong and then it gave some of it back. We have Aussie, New Zealand, dollar, pound, CAD under the zero line. We have Japanese yen, euro, and Swiss on top. So hanging out there. Let's take a look at gold and silver. Dollar index is doing a nice job going lower, into the end of the year or, resuming this post FOMC. What's interesting is the September rate decision started a rally on the dollar. This one helped kind of push it back down after wondering, is the dollar going to be squeezing above 100 or maybe coming back to retest lows? I'm not sure yet. I mean, obviously we can continue to come back down to retest these lows. I don't see the dollar necessarily going too much lower, however. If we hit the backside of this falling wedge trend line or we hit the lows again around 96 or so, I could see that offering support and maybe some range bound opportunities in dollar pairs. Oil, a bit more bearish. I've got a trade expiring on the 16th for oil futures. That should be worth the 200. That's another Project Options Edge trade for $220, and this will expire on Tuesday next week, I believe. Okay, natural gas 1308. Ugh, another freaking reset on natural gas. I'm long natural gas into 2027. I just have a couple chart alarms to try to take some profit in the 20s. Gold, pretty good day on gold. I'm not bullish. I'm not like crazy bullish on it. I think it's a great trade to have in the portfolio. Just don't get your hopes up and get super excited about a runaway move because I think we're going to pull back to the 200-day moving average. So to me, this is, nasty correction, slowly grind all the way back to the highs again. To me, this is, slow and choppy, get back to the highs. Really good spot for a double top, and we fall. Does it mean I want to short gold? No, it just means I want to wait to buy. I want to wait to buy. I want that 200-day moving average to buy. So I'm just not chasing this stuff, man. If gold goes higher, cool. I'll make a lot of money on my puts, my naked puts, but I'm just not chasing this right now. Silver, another strong close. I mean, this rally just since October has been crazy. Since October, silver is up 41%, and it's over 100% year to date. Amazing. Bitcoin, little drama, back below 90 for a second. Let's see if we can get a crack on the weekend above 95. Maybe getting back into the 100K. If we get above 100 on Bitcoin, that could be a pretty good sign for the bulls to kind of stabilize things. MicroStrategy back to 183. I did close out a winner for my build a trade segment that I did last week. I closed out for $100 on MicroStrategy. Coinbase, I've got some ratio spreads. Japanese yen, meh. EWJ, this is my Nikkei trade. It's up to near highs again, which is good. Let's go EWZ. See if we can get some fresh highs on Brazil. See if we can get some fresh highs on Latin America. I own those. I have those ETFs. Mags, I'll wait. I measured this out like a potential head and shoulders pattern. Apple, I'd buy dips on Apple. I would. I mean, if Apple, here's a good thing to do on all of your charts for 2025. Take your April low, take whatever high was formed here in 2025. If you're looking for a positional trade, I do like these fibs. If we pull back to the 236 or the 30, 38%, those are great spots to look for. If we pull back to the 50%, get equilibrium, a great spot to look for. So if you're looking to kind of dollar cost average in, not some bad spots, right? My big low would be, I don't think we necessarily take out the April lows. I don't think that we will. So participating in this window, right? And having prices get dips and pullbacks and then try to trough out, grind its way back up to highs again. If the market offers a correction, I want some dry powder to buy those dips. So like I said, I'm just not in a hurry to chase these highs. If they go higher, S&P goes higher. That's an easy participation trade in the NASDAQ or in the S&P and the NASDAQ, like the indexes, right? But this is pretty much my go-to for any stock this year. Take your April low, take your high, and see if prices offer some pullbacks and then position accordingly. Amazon, same thing. Take your low, take your high. Here's your low. Here's your high. We've already pulled back to the 382. Is this a good spot? Sure. 382 pullback, going back up to the highs again. We could hit 258. We could also pull back to the 50 or 618 and offer a swing. There's also a gap down here. I like that trade. I'd love to have some Amazon at $200. Broadcom, same thing. With this blowout move, it's like, I thought it was this, right? I thought it was this. Just take the swing. If it pulls back, buy some dips. Google, low to high. If we get some pullbacks, buy the dip. Meta, we already had the swing. We pulled back to the 618. That's why I was long on Meta from the 610. Microsoft, we pulled back to the 382. If we bounce around here and stabilize around the 382, like this is good past resistance to become support on Microsoft. I could see like 470 holding and then working its way back to highs again. Netflix, this one is not like the 2020. It's like this one doesn't have the same type of move. It's off the moving average. We're now breaking structure. I think the concern with Netflix right now is we're getting a bit of that death cross look. So my dark blue line, it's a 50 period moving average. We're crossing over the 200. So prices aggressively crossed over. Also, if you start back into the bear market of 2022, that's probably the bigger fib that I would look for, right? Pull back into this like 50% zone from the 2022 lows. Now you're talking like pretty good levels to buy some Netflix, hopefully. NVIDIA, same thing. Take your April low to there. Any pullbacks, probably a buy. Tesla, ridiculous move. I do like Tesla a lot for 2026. I think Tesla has a lot of promise in 2026. I hope, but maybe Tesla gets overshadowed when SpaceX goes public, right? If we have a SpaceX IPO and it's valued at $800 billion, maybe nobody gives a crap about Tesla because it's like, well, it's just an automaker. I'm hoping that it's not just that because of humanoids and chips and energy and things like that. But anyway, I do have some pretty big plans for Tesla. Berkshire Hathaway, man, they're sitting on like 30% cash. That's a big deal. Bonds, bonds were down in the day. Yields sticky again, like just no budge. Fed cuts rates, bonds don't care. Yields are still up. Global PMIs are up. This is probably going to be the situation we have to deal with. Bond yields are sticky. Our 10-year yield is not going down. Things are still expensive. Okay. Stacy says, if I bought your options class you made for your nephews, where do I find it? Yeah, of course. Practical Options, here it is. There's a link in the chat for you. Also, you can send me an email, chrispulverpub@gmail.com. If that link's not working, you can send me an email. There is the full course. So yeah, it'd be great. And also, like, feel free to reach out, and if you want me to clarify, or once you go through the material and stuff, like, I'm happy to also look at like a one-on-one. I do some private workshops if you want to spend some more time on it. Talking through strategies, looking at some real life examples. Like, I'm happy to work with the family as well. Just let me know. That's always fun, right? I mean, I've met hundreds and hundreds of traders over the last decade plus of doing financial education, and it is amazing how much how much we can cover in like those private workshops, where it's like I just get a glimpse into like how you look at the markets, how you think about the markets. And honestly, a lot of it is just you just kind of tweak the like risk parameters, take a little bit less risk, understand the strategies cold, get really good at one strategy. And I see a lot of traders do really, really well. I think what happens is a lot of traders try to trade everything under the sun, and they try to trade every single direction in the market, when the reality is just focus on one thing. Focus on one thing. chrispulverpub@gmail.com. I'll type it in here. I don't want to send it in the general chat here. So chrispulverpub@gmail.com. Yep. Shoot me an email. chrispulverpub@gmail.com. Cool. All right. Average mortgage rate still 6.22. If we get 5.5 or lower, I'm probably refinancing. We bought a house here, closed in May, I think May or June, at like a 6.6. I would be willing to look at a 1% refi. It makes it worth it if at least you're in a house for 3 to 5 years. Sometimes you can pay back that refi within like 12 months, but a 1% is a big chunk of change. But I don't think we're going to get there. Honestly, I think what's going to happen is house prices have to come down. Rates are going to be sticky. The bond market is just being really stubborn. So time will tell. All right. I'll wrap it up there in just a minute or so. So we are just like 20 points away from all-time highs. Path of least resistance to me looks up, unless we have like a nasty move to finish the week, or there's drama next week with all the the news that sprinkled in for the final week of the year. Part of me thinks that this market's going to do this. It might be noisy, but you can mark down a couple levels as long as we stay above around 67.50. Okay, 67.50. If we stay above that level, I think this market tries to march towards 7,000. Okay, I had to freehand that because my drawing tool is gone for some reason. So if we stay above 67.50, path of least resistance is we get up to 7,000-ish, or at least make an effort to get up there again. All-time highs at 69.20, 21 or 22. 69.20 and change is the high. So if we get there, 7,000 could be hit during the holidays. Next week is our last full week of trading, and then it goes into pure holiday mode. Daily Profit Play members, you're in my Daily Profit Play sessions. I'm going to be very, very picky on our holiday trading, because market makers don't really have to show up and do their job when there's way less volume in the market. The guardrails could be off, so let's keep an eye on those VIX levels. Maybe put in some defense trades, and we can probably skim the top or skim the bottom versus trying to take our typical daily profit play. So we'll be flexible a little bit through the holidays. I just don't want to take up any silly trades. We've had a lot of good winners. Trying to think here, we got a nice little streak running. That's time. So September, I'm going back a little bit. September. All right, so 454. 1, 2, 3, 4, 5, 6, 7. All right. Oops. So 454. So 7 trades. 535 minus 454. So we have 74 out of 81. 74 out of 81 trades in daily profit have been winners. So we're at a 91.3% win rate in the last couple of months. That's freaking sweet. That's awesome for daily profit play, especially since we tighten up the risk and we've had bigger profits. That is a nice stretch of income. So if I look at the dollar amount, go back to that little August starting point. About $10,000 in profit. It's not too bad. Daily profit play, little engine that could. Little 1-2 contract combo, not too bad. So it works. All right, good stuff. All right, I'll let you go for today. Come back and join me tomorrow. Everyone's welcome to join. Daily Profit Play, 9 a.m. Eastern Time. Last day of the week, we'll be live for our full week of trading next week. I'm doing some traveling next week on Friday, so I might not be available next week Friday, but we have some news. We got some rate decisions. We've got some CPI, PPI combination stuff. And that's it. Then after that, it's like holidays. If the markets are not derailing, if the markets are not doing any structural damage, sideways or path of least resistance is melting higher through the holidays. So don't fight the flow. I will say that. Don't fight the flow. So as long as the market doesn't do anything red or do anything nasty, we will just kind of melt up into the end of the year. All right. So if tomorrow is a red day, well, put the brakes on that thesis. But if we stay where we are, have a quiet day tomorrow, work our way into all-time highs again, I think we'll try to sniff out that 7,000 handle.